If you're still making the same mistakes trading and it's costing you, it's not your strategy. In today's video, I'm going to tell you what you need to fix. And it's not another indicator, a tool, charting platform, or a brand new strategy to hinge onto. It all comes down to trade journaling and how exactly you do it. This isn't just another trade journaling video. I promise you, you're about to get some content that will change your life. Let's dive into today's topic. When we think of a trading journal, there's two ways to do it. Number one is to record the price that you got in, the price you got out, how much you risked per trade, how far it went up and down in your direction or against you, and then to also record the information where your stop was, how much did you risk, what was your return. Now, these are what I call hard data when you're journaling, and hard data is important, but in today's day and age, you can capture all of that in your trading software. I use Sierra charts for futures day trading, and Sierra will give you a list of all the trades that you've done based on a date, and you can filter them and see a plethora of hard data. The second way to journal is to journal yourself, to look inward when you're journaling, and that's what I'm about to spend the rest of the time on this video showing you. I think it's more important to journal this way at the start because you're actually capturing data that the other journaling way misses. If your software already picks up all these data points, what's the point of you journaling that way as well? So I'm going to walk you through my personal journaling template, and I'm going to allow you to download this in the link in the description so you could use it to create your very own. But this might actually shock you on how I do it. So let's get into it. So first and foremost, I start out the day with an analysis and trade setup. So essentially what I'm looking for here is what levels and what areas am I looking to trade? Because if you don't have that answer, you might as well not start trading because you're about to do things you're not looking for. Therefore, I establish right off the get-go what my analysis and trade setup is going to be. So for today's session, or the April 17th session that you see here, I have put down that we're in between two pretty key levels and erased a big downside prior day US move in the overnight session. Buyers have been buying up the sell moves pretty quickly last few occurrences, but can't seem to make a run above 54.40 and accept that price. In today's session, I'm looking to play just the levels and focus on executing just three lot trades rather, without chasing a big win. So I'm already setting the tone here for myself to have a calm, relaxed session and just follow the plan. It was also a Friday. And it being a Friday, I reduced my trading size a lot, enough to just participate in the session and not get rusty. But I'm not looking for these big outsized wins on Fridays. All right, and the last day of the week and Thursday before Easter has a bullish skew to it. So I think the optimism translates well to stock market, given it's still technically a discount in comparison to where price was just a few weeks ago. Now, this brings in a little bit of sentiment and dynamic from outside of the market. This was just a week and a half after Liberation Day with Donald Trump announcing big tariffs. So I'm bringing these things in and I'm highlighting and making myself aware of the market condition. And this is where a lot of traders, will do this in their journaling. We haven't gotten to the part that's different about this journal and mind-blowing quite yet, but we will in a second. So after the analysis, I do my trade setup. And the way I do my trade setup is super simple. I essentially just go in and I list the 4 trades or 5 or 2 trades, whatever I'm looking for the day here. All right. And when I list these trades on the right side, I use this and I keep this chart open in my trading setup the whole day. This will stay up on my monitor and just live there for an entire session to be a constant reminder of the high probability trading areas so I don't get jammed up in between them. All right, so what I was looking to do is long the 64, which is a break and retest. That's this trade. To short the 64 if it fails, and to long and short above and below the bottom level. So really, I just started out with 2 levels, and I'm only trading 2 levels for the entire session because it was a Friday. And on most days, I like to get out of the markets by 11:30 latest. I'm not an all-day type of trader. All right, so let's continue on and see the next section of the trading plan, which starts to get fascinating. All right, this is what I wrote about it. Why do I have these headphones in? I'm not even using them. This is what I wrote about the session. There are more trades today, but it doesn't mean I need to rush the process. And if we open right at the trade level, I'll most likely opt to skip that trade instead of getting jammed in the first 15 minutes of the open, especially on the last trading day of the week. So what I'm highlighting here is I'm slowing myself down. I'm essentially talking to myself in this journal. All right. And it's key to understand that, because when we run the trading room, Victorio gets a chance to talk to people, and through him audibly expressing himself, he's also hearing himself. So he's got the feedback loop created. When you're a trader just sitting at home, not only are you not getting a chance to create your own feedback loop, you're oftentimes in a room listening to somebody. So it's even more important to record your reflections as you go. The next thing I do in my trading journal here is I look at a news calendar. Now, you could get news calendars wherever you want. This one's from my source at News Squawk. And that you see here today in the Eastern time, which is what I focus on because that's where I live. You see the different announcements, their impact, the expectations, the high, low, the previous, the revisions, etc. You'll notice that, up until 11 o'clock, 11 is the first real news event that we have. And then 11:45, you have a Fed speaker here on this day who's a voter. I'm sorry, my pen skills are a little rusty, right? So essentially, in a sense, there's nothing that could impact my trades because I'm planning to be done by 11 a.m. So now this is where it gets exciting, and it's different a lot of times from journals. I begin to talk to myself, and I do this through typing. So my entire journal is a recording of dialogue between myself. And it's a recording of dialogue between the boss of the trading plan, who's in charge of creating, implementing, monitoring the strategy, and myself as a trader and operator who actually takes that plan and executes it. All right, so in the journal, the first thing I mentioned at 9:20 is this morning I'm going to focus on trading what's inside my head and stay focused, listening to frequency music to stay centered, balanced, and focused. I already said focus there 2 times. All right, so this is before the market opened, 10 minutes before. I remind myself what I'm looking for. I put in my deep focus music in my headphones, and I completely tune everything out. The only other audible piece of information I hear throughout my trading session is the news squawk, and it only goes off when there's important and very relevant information. All right, so I limit the amount of audible data I'm consuming because, as you guys know, I took a break to pursue music, and I've trained my ear to be so super sensitive that I can't really tolerate overlapping audios as well because I just separate them in my head. I split them. So at 9:33, I write this: market open. I saw a few bids, but sellers stepped in. We're at 423,000 daily volume on the ES, which is the S&P 500 contract. So I said there's an auction here for sure, watching as we approach the key level. So we hadn't really been at the level, but it's approaching it. All right, 9:35, this is what I write. And I'm doing this as an exercise, walking you through the day, because I think this is where it's most valuable rather than blabbing at you and telling you how to do it. When you see this being reviewed, you're going to very quickly understand what you have to do to create your own process. All right. At 9:33, or 9:35 rather, I said, here's a failed rally attempt. Sellers look to be trying to make a push down for the first level today. Gonna see how it rotates around that area and watch order flow closely. And the way that I write and the way I'm talking right now seems like a non-frustrated trader. It actually seems like a very patient, well-behaved, strategic trader. And this is what I like to see in the journal. And by the way, I like to mention here that if I do get emotional, I don't hold these emotions back. I'm not thinking about what to write in the journal because there's way too many things to think about during the trading day. My entire brain power is preserved for making the trade and analyzing when that time is to click the button and execute. I'm not thinking about what to write and how it sounds. I'm just brain dumping on it and talking for whatever I think is important. This is a subconscious process. It's not a logical thinking process. I'm writing this journal with the assumption no one's going to read it but me. So you will see typos and things that may not make grammatical sense because this is a live brain dump from the subconscious. All right, so 9:41, I'd say this: got the trade at the upper band of the level, higher than I expected on the plan, but the order flow setup happened earlier. So I saw big time absorption on the sell side and buyers just kept rebidding higher off the lows and it looked good, I got 3 contracts. So here you could see I'm acknowledging that I got it on the upper band of the level, but it still did hit my level. And I'm giving context here to myself why I got in and slightly higher on the level rather than waiting for the pullback. I'm capturing the moment I make the decision in real time in this journal. So I got the 3 contracts, right? 9:44, just 3 minutes later, I said close out 2/3 and leaving one with a stop below the big buy and sell deltas that formed. Entries in between them, and the plan is targeting higher levels, watching auction closely to see if I could get a run, a continuation to make some more money in this trade. Now, in this part of it, I also clipped a DOM, but this is what I do. In a journal, I have it set up so I can screenshot very quick and dump into this note. I use Apple Notes, by the way, but you can use any platform that allows direct copy and paste into it, because I think that's the most important functionality. So when you look at what I said, all right, why I closed out the trade, well, the market is much higher than you see here. But what I'm basically showing myself here, and I'm going to illustrate this to you with the pen, is you have a really big sell delta level at the 13 even, and then a big buy delta at the 12 half, just 2 ticks lower, or half a point on the S&P 500. So what does this mean? It means I got the trade at a very good level. But I like treble. Treble has a ring to it. Maybe we should brand something with treble. The treble indicator. But I got it at a good level. And my stop loss on my initial position, which is just 1/3 now remaining, because remember, this is why I got rid of 2/3. I'll show you in 1 second. But my 1/3 position is well protected under this level. So in this journal, I'm identifying not just the entry and the exits and the RR, which is what the hard data captures. I'm identifying in real time the decision-making process for what I'm doing. And that right there is more gold than you'd ever believe. All right, so as we continue forward here, all right, and we scroll down, 9:45, I said I'm not going to add back into this trade. If it gets stopped, it gets stopped. I'm going to wait and see more information at the level extremes. If it gets back down to the 08, which was my daily level, I want to see some rotation and flow around that level, order flow. And if not, then I'm long already, and I'll see more information to the upside. Basically acknowledging if we get down to that support structure, I'm going to buy it again. But if we don't, I'm already long 1/3. I've exited for profit, and this trade is a free runner. Doesn't mean you get the end doing your job, but you get a chance to get a runner into the market. All right, at 9:46, I said there's a lot of buy delta to the upside for buyers to come through. So it's not going to be a straight shot higher, and likely will be a rotational move anyways. So I'm just filling in the thought from 9:45, the minute before it. So if we scroll back, or sorry, rather if we scroll down this document, you'll see what I'm talking about here, and this becomes very important. These are the deltas or the levels at which there are a lot of buyers. So the price is somewhere here below. And if I actually get off of this, you can see where the price is. We're trading at the 53.20 quarter, because you can see at the bottom of the DOM, right? So at around 26, 6 points higher, we got a lot of resistance. At 32, we got a lot of resistance. And at 34, we got a lot of resistance. Now, that's a ways up, right? It's almost 10 points down off of the 20. It's actually more than 10 points. If you get the 34, you got another 14 points with the 1/3 I have left. But what I'm trying to communicate to myself here is that these buy areas, this means delta, and delta is essentially calculated by offer minus bid volume. All right. And so if you have a negative number, it means there are more active sellers. And if you have a positive number, it means there are more active buyers, all right, or more aggressive buyers. Active is the wrong word. The right one is aggressive, all right? So why would a level with aggressive buyers, given that now we have that terminology, if the price is down here and there's aggressive buyers at 32, all right, and at 34, why would trading up from the 20, why would a lot of buyers up here be bad news? Why is that a resistance and not a support? Well, the reason being is if you bought a whole bunch of contracts at 32 and 34 and you went down to trade the '08 level that I was looking for, and then you're rebounding, what is the first thing you're going to do if you're long? You're going to say, I just lived through a really, really big downside. It's coming back to the level where I could breathe comfort. I'm going to sell my long position for break even. Ultimately, having $0 is a great thing if you're coming from a loss, right? And so that's why it becomes a resistance, because once you're long, you have to sell to get out of the position. And this is the part a lot of traders don't understand. They say there's a lot of buy volume, I'm going to buy too. But if there's a lot of buy volume and the price is below that buy volume failed with the objective of getting the price to go higher. It couldn't sustain that price. So despite the fact there was a lot of buy volume, and yes, there are a lot of open buyers in that space, but once you're long, you're a seller to get out of your position. All right. So this is why in the trade plan here, I'm identifying these areas as a target, which are resistances. All right. So 949, I now go back and say to myself, hey, I added back into the trade because the order flow was very strong. After, a few minutes before I said, I'm not going to add back into it. Now I said, I'm going to add back into it. But I didn't write in here, because I want to make more money because my kids are eventually going to go to college and I got to start preparing. That's not what I wrote. And if that's what I was going for, I'm like, look, I want to make a little more this session. I would have put that in there. I do have journals where I get a little more emotional, right? But I said because the order flow was very strong, and so was the level. So I said if we could break the open, which is also the point of control, we got some big buy stops coming out and targeting 35 to let go of one more contract, then hold the last third for the 55. So basically what I'm doing here is I had 3 contracts. All right. I sold 2/3 down to 1 contract, and then I added 2 more contracts to get back to 3. I basically reloaded my trade at a higher level, and I used the 1 contract from the initial open to the upside to give me the positive or the profit that I needed to put 2 more in, and to use the profit of this to have very little risk once you calculate the total balance of the trade, right? So I'm scaling in essentially into the market. All right, 951, I said closed 1/3 at 31/4 because we had a massive cluster of buyers sitting above, and I had to give them respect. Even if that's a typo. Even if it meant taking less profit, at least I'm listening to what the market is dictating. This here sounds like a journal from a trader who's looking at the important information. There's no tilt here. There's no FOMO. There's no revenge trading. I'm also profitable in a trade at the moment, and I've added to it a second time. Therefore, there isn't any FOMO that's going to come out of being. I mean, FOMO will work, but there's no revenge trading because I'm positive, right? So this is what I'm talking about here. I said because we had a massive cluster of buyers sitting above, and I had to give them respect. Basically, what I'm saying is, when we were trading down at the 30s on this trade, now I've gained 3.5 points on 2 contracts, so I'm up 7 points extra from when I added. But now the price has run right into this big cluster of buyers. And what do we say? This big cluster of buyers are going to end up being sellers on the way back up. Why? Because they held on the downside, they had a loss, and now they have a chance for recovery. All right, at break even. So I'm saying, it's been a nice ride on the way up, but now we're approaching a level where it's going to get a little more jittery, and I don't want to find out what happens. I trade edge. I don't trade hope, right? Sure, I could hope for it to go through, but statistically, you never know what's going to happen. Okay, so now we get to 10:05, and we have a huge seller that just peppered the market at the 32 and left a big black hole in the chart. LOL. I even laugh at myself in the journal. Now, this is the moment I've been working up to. I want you guys to understand. All right. Interesting to see if it was a desperation seller or start of a reversal. No news squawk. Basically, remember, I'm listening to deep focus frequency music, and I'm not hearing anything on the news. This thing just got peppered lower, and I'll show you the chart. Got down my level. It's probably meant to be a 2. And I traded it, but the reoffer right now looks savage, meaning there's people selling, coming back in on the offer. They're reloading the sell side. Even though the trend is good, the flow turns super bearish on a dime, meaning the order flow, even we had a nice upside trend, but it turned super bearish, which means downside buyers just stepped in and they're reloading that order. So we ran into a big trader. Non-coincidentally, it was right at that big block of buyers that I showed you. And this is the reason I took the profit and said I'm going to give the market some respect, because we have a lot of big buyers above. They're going to try to unload their long position, because once you've bought, you become a seller, right? Got down to my level and I traded it, but the reoffer looks savage. Even though the trend is good, the flow turned bearish on a dime. Interested to see what the auction looks like at 32. Definitely an area to scale out of. All right. And this is what it looks like now on the footprint chart. Now, I love the footprint chart, but it's just misused so often because you're not using it wrong. You're just using it at the wrong time. All right. And you could see why I have misspelled things in my journal. I couldn't even spell wrong properly. That's how right I am. All right, so you're using it the wrong time, but this is what I'm talking about. So we were working up to our level. You know, I got rid of the 33s. We went up to about 35 half. You could see here we started approaching on that buy delta. All right, and then I drew a big red circle with downside. So what you see here is we're skipping levels of price. The orders got so aggressive to the sell side. All right, and they come in and they start slamming the market with massive sell orders. What are the buyers going to do? Well, the buyers begin to pull their bids. And when you begin to pull your bid, you're saying, I don't want to buy it anymore. So if there's a decrease of willing buyers that are matching an increase of aggressive sellers, that's going to lead to a drop in price. All right. And so this is what I saw that got me out of the, well, it didn't get me out of the long trade, but it pretty much came just 2.5 points after I had already said this cluster of buy delta to the upside here is going to be a big resistance potentially. From statistics and edge, you expect resistance here. Now, if it's shot right through it, then hey, you know what I mean? I'm still on the team for one trade, but not the full size. I got paid because I was expecting a resistance in that trade. All right. So then I say this here in my journal, and then bam, right after, 2 minutes later, you see this huge seller respond to the market. And exactly what I had feared and why I sold 2/3 of my long position happens. All right. Now look at this, watching to see if this wall of selling holds a support around 22. Lots of sell delta. All right. And now you scroll down and this is what I'm showing on the chart. Okay, I'm saying, look, now we have a new cluster of sell delta between 20 quarter to 23 half. So I just called it 22 on average. And it comes down, it rotates once, makes a push to lows, can't break lows, failed low, push back up for a second time. All right, and then it fails and rallies through the 22. But where I had curiosity of, will this hold as a resistance, it sure did, because it pinned the market underneath that price. It contained it to the sell delta and it reversed upward. Now, what you kind of want to see here, and what actually you will see it in a second, I'll show it to you in a moment. Remember, this is a learning moment here that I have to put in. I wasn't planning on doing it, but here it is. When you see a big order flow sell level like here, all right, that we talked about over here, all right, remember that was the one I showed you earlier where just big selling comes in, bids start getting pulled, the market just skips levels, which is called slippage. When you see that happen and it has a big move lower and it retests to it, you better draw that level on your chart and respect it for the whole day, because there's two kinds of levels, right? The ones that you could plan for using auction market theory, volume profiles, you know, prior swing lows and highs, market structure, whatever. But the other type of level is the ones that you can't plan for. There's no way to plan for them because you don't know if an institutional trader is going to come and just dump the 33 on some heavy size. There's no way to actually know that. Even the person that traded it didn't know that this was going to happen today. So these real-time levels, as I call them, or order flow levels, are so key. These here, when you get good enough at spotting patterns, these right here have the potential to just alone be a profitable trading strategy. Imagine starting the day not knowing what you're looking for, but knowing that when you see an order flow level, it's tradable. All right, something you could add in your repertoire later on. But I'm here and identified that. I said scaled right out at the 32 because that massive sell order that overwhelmed the market down could be start of a bear move that takes us to and through the first daily support. So what I'm saying here is it sold there initially. We're coming back up to it from below. I'm out. I'm out of the whole trade, the whole package, the whole kit and caboodle. I don't want to have anything to do with being long as we approach that big sell level in real time that was identified by order flow. So here's the trade review visually. All right. And this is what I did. So here we got long. Okay, this was the initial level, and I was saying, or let's put this into context now. This was my initial level, but I bought it a little bit higher here and here. All right, and I think I use an 8 to 10 point stop here on the ES. Okay, I'm not sure. It might have been 7. But as I buy it, it rallies up and I hit a cluster of buy delta. I love this chart, the way I have it configured. I have delta by daily. The blue is buying, the gray is selling. I have a very light chart. It makes me more patient. A dark chart makes me just want to act. All right, and just my personality. So as we approach this big buy delta, for the same reason I spoke to you, I got rid of one contract. All right, now we sell back off. The order flow still looks good. We're at a really good level. Now we're right above a big sell delta for the day and the opening range low, which is this yellow line. That's my ORL. All right, and we get back into that area. We're right where I bought it before. We're right above a big sell delta. We're right above a key level of mine, you know, and I still like the trade. Luckily, I took profit. Well, it's not luck, you know, by edge and by plan, I took profit here because when it came down, I got the double dip on that ride and I got too long. On the way up, I saw a little bit of signs that there were going to be some resistance and I got out. And then I sold this one here, as I said, in the plan at 32. Why? Because there was really big buy delta above today, and we're in big buy delta already from yesterday's session. All right. And when you look at that, you say to yourself, all right, well, yes, it might go higher, but might never paid my bills. So statistically, I have to let go of some of this position. And then whack, you see the 32 seller come down right back to the 22, which was a key level. I added more, so I triple dipped this trade for a third entry. All right. And then we shoot back up. And what did I say in the journal? Do you remember? Said, hey, or actually, what did I say during this video? I said that 32 was a massive sell. Look, it caused this sell move, rotation back up. I'm long already, but I'm not hoping to break through. If it does break through, I'd rather it break through, come back, and then I could try another entry a little bit higher. If the market's going well, I would rather pay money, pay a higher price to get into a higher quality move. I have no problem with that. But statistically, as we run into this 32, this was the order flow level, all right, that had big selling. As we run back into it, I got out almost, 2 ticks below the high of that move, and the market savage sold right back down to the level. So see how picking up that real-time order flow level, I don't know why it's disappearing like this, but I'm not intentionally doing that. As I picked up on that real-time order flow level, how it became the basis of not only getting off the long bias and giving the market respect for this new addition of liquidity to the sell side, I also gave myself structure and it created into a plan, into a real-time opportunity. All right. And that day was actually really good. Now you look at it, and I say this to myself: great trading day. Got on it early. Had some big realizations today that made it to the long-term archive. I also have a long-term archive where if I find something super valuable for myself, I put it there, so I can just review that archive, and I only have the gold that I've accumulated throughout trading since 2001. I said trust the order flow, trust the process. This makes it in my journals quite often. This one line here: trust the order flow, trust the process. If I had ignored the order flow selling level, I would have stayed long and gave up the gains. Instead, I listened to the logic and nuked the long. I got rid of it. Watched it drop super sharp and quick after. Now that's a nice validation feeling. And I say very proud of the execution today, despite the purposeful smaller lot size due to external factors. I had quite a few stressful events going on in my life during this time period, and a lot more stressful right after this time period in hindsight. Also had like kind of a crappy sleep day, and it's Friday. And we had Liberation Day that was exhausting in terms of momentum and movement. So it took a lot of energy out. So I want to have a chill day. And here it was. At the end of the day, this chill day created $381 profit for me. It's not big. The win in the day here isn't this is the hard data, by the way, that we spoke about. I was just drawing lines. This is the hard data. All right. And it's not this that makes me proud. It's everything else that I captured in this journaling day that makes it a great day. Now you understand, if you just relied on that, you say, oh, I made $381. The guys on Twitter made 10 billion today in 2 seconds. I suck as a trader. The profit isn't enough to pay for my bills on a daily basis, right? Let's be honest. But at the end of the day, I captured so much information in this real-time process. I could now go back and pin that moment for the order flow and keep it in my archive for the future. I now have taken away the highlight reel moments that a real trading journal that uses hard data only would have missed entirely. All you would have had is a memory, and that memory fades by the time the next market day opens. So this is why I'm trying to encourage you to do a minute-by-minute journal like this. Every time you have a thought that's structural or foundation to what you're trying to do for the day, record it. All right. And then at the end, I have takeaways for tomorrow. And the way I start every single trading day with my journal is to review my takeaways for tomorrow. And if I'm not doing good, then review my my archive. I like trading alone in my head with News Squawk Equity Channel. I'm going to just highlight. All right. And deep focus frequency music on Spotify. You're going to ask me, what is this music? Find one that works for you. I don't like lyrics in my music while I'm trading. I don't have time to focus on a singer's storytelling of heartbreak when I'm trying to make money. I'm not trying to create my own heartbreak. Lyrics program your subconscious, so don't listen to anything with lyrics that aren't supporting you. It's too much work to filter out people's lyrics, so I listen to just deep focus frequency music. If you go to Spotify and type in deep focus music, that list is going to come up. It's a little blue brain. I love it. All right, and then I say trusting the level is key, and also not thinking about the trading aspect. Do the trade when the market's at the level and order flow looks good. Simple, keep it stupid simple. Love it. No matter where the level is, keep looking at the key data, especially flow when it's significant order that makes a huge move in the market. It's not something I had to learn, but it's a good affirmation for the next day. Good trading day today, textbook anchored to this kind of day. So tomorrow, or the 18th, but that was a Saturday, 19th. So the 20th of April, I start by reading these takeaways. All right. Takeaways for the next trading day. Boom. I review this. I re-anchor and remember everything that went on that day. And I'm ready to start with the same kind of energy the next trading day, and to pick away and pluck away the positives, what I need to work on, and how to improve. It's not about going from where you're at to being a super successful trader in the next week. It's about getting 1% better every day and allowing time to do the work for you. All right. And this is what I wanted to share with you, and hopefully gave you enough context of what a professional trader's journal looks like, and a different way to journal other than just hard data. Journal like this with your thoughts, and I promise you the things you're able to take away from them are invaluable. You can't even pay for this kind of information if you tried. Now think about all the other times you didn't journal like this, regardless of what your profit and loss has been in that period. Think about how much information you missed and how much opportunity you missed to record the thing that matters, right? And for that reason, you want to journal not exactly like this, but something similar. And the last point I want to leave you with on the journaling front is, look, if you're going to journal, be honest, and I will do another video, comment and like if you guys want me to, but I'll do a video where I had a disastrous day for you to see my thought process too. I'm brutally honest as I go. So be honest with your journaling. If you're sitting there typing and lying and trying to make it look like a good journal, then you're doing it wrong and you're wasting your time and money. All right. And when you journal like this at 4 p.m. when the session closes, this won't change. What you've already written is recorded. When you don't journal this and say to yourself, I'm going to journal after the fact of the trade, at 4 p.m., your subconscious is shut down, your ego is firing, and all you're going to do is look for excuses. look for new indicators, look for new mentors, look for new YouTube channels. All right. The ego glazes everything over and takes away the real learning lesson. If you do it like this at 4 p.m., what you're actually reviewing is helpful information that the ego can't change. All right, guys, that's it. Hopefully you enjoyed the review of how I journal and how I approach the task of recording what's going on with my psychology, as much as I care about the hard data numbers that are created through what we do as traders. If you like this video, please hit the like button and subscribe to our channel. We got a lot of great content coming out. And also, don't forget to get the free resource in the description below. Thank you for watching and have yourself a great day. Good luck and good trading.